here I think it's a good point to transition to looking a little more at the characteristics of the U.S. market. I know there's probably a number of economists here, so I don't want to go into too deeply, but the purpose I want to show is that the U.S. economy, it's had a very favorable impact, especially in the most recent years on the franchise industry. Since 2008, 2009, there's been a strong recovery, and this has favorably impacted the industry. You have strong GDP growth, practically full employment, low inflation, low risk of irrational exuberance causing a bubble similar to the real estate bubble that we had in 2008. From the franchise side, it's some statistics that are good to look at are GDP, the growth in personal services, real disposable income increases as well. Now, what are some? I want to give a little bit of background about the U.S. franchising industry, where it's at. So, there's over 5,000 brands and licensing companies in the U.S. There's, as of 2015, there were over 782,000 units in the U.S. Both directly and indirectly, it generates 21 million jobs and generating over $2.3 trillion for the U.S. economy. And since 2010, there's been a 26% growth in terms of the number of units in franchising. So this is an industry that's experienced very good growth, strong growth. I want to, if you direct to the graph on the right, you'll see you have the number of units, employment, and GDP. You can see that they've all been growing quite strongly since the financial crisis in